If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. Happy JPM week.
Yes. We both did not make it out there this week.
So happy to not be there.
Yeah.
Oh, so happy to not be there. I was up in New York, and we met with some of our LPs at Nova, Catherine and I, and it's great to kick off the year, see some LPs.
Yeah.
Not be in San Francisco for all the JPM madness, but it was really cold up there, I have to say.
New York,
Oh, the weather was not fun.
Yeah.
Not fun at all. But the city's doing great. It's alive, lots of stuff going on.
Yeah. Yeah, and I had several portfolio companies at JPMorgan. I was trying to help connect them, but it's much more fun to be here, like saying, hey, let me connect you to this person, but then going home and going to sleep.
Yeah. I mean, it feels like a every other year thing, I think, is going to be my cadence with it.
Yeah. I'm 2 years in a row missing it, and I don't feel like I missed that much, but we'll see.
Last year, we kind of had the purpose of specifically engaging, I think, really with our existing LPs, because so many of them were out there, kind of letting them know, hey, here's sort of the status of things. We're starting up the Fund 2 process, et cetera, et cetera.
Yeah.
So that was... It felt like we had to go out there for that purpose. This year, I was just like, why? The question is why? Hotel rooms are $2,000 a night, and et cetera. So it's like, why are you doing it?
I was talking to an LP about it. I think, there's no deal flow for me out there.
Me either.
It is a good place to sell assets.
Yes.
And I have two companies exploring that out there, but they didn't need me hanging around. So it just depends on the purpose. The
Nova portfolio is not in a selling posture yet. We're still in a value creation posture. We did have a couple of portfolio companies. I talked to one today. They had a great time meeting a bunch of folks, getting some great interest for future financing. Yeah. But I just...
Yeah, especially with Vive coming to Nashville in a month.
Right.
All the same people that I could
here.
Shake hands with and kiss babies are going to be here.
Yeah. Yeah. And I do think there's been this trend year over year where the news around JPM is kind of becoming less and less critical.
Yeah, I think that's right. It's more of a always on, the news cycle's going all the time. Right. So you don't necessarily save up things for, maybe if it happens at Christmas you do, but people aren't saving things like they used to for JPMorgan.
Yeah, I agree. The news cycle is kind of always going. But we have the overlap of JPM with Q4 earnings starting to roll out with the inauguration next Monday.
Yes, and all the policy, Biden administration leaving, all these things. So a lot of news going on.
And just throw TikTok in there.
Right.
With that little preamble, let's dig in. Starting with the economy, let's talk about jobs, Vic.
Yeah, so Friday, right after we recorded last week, the jobs report came out, and it was incredibly strong.
Great
Very
report.
Strong report. 256,000 jobs. It was good on every level. There were a lot of jobs. The unemployment rate went down slightly, but went down.
So I guess the question is, why is this story coming out juxtaposed with so many stories talking about, Harvard MBA is graduating and it's taking them 6 months and they're not finding jobs. Middle managers who have been fired are finding that they can't sort of find their next job. So how do you, I'm pulling us off of the script a little bit here, but it wasn't lost on me that we had those two kinds of stories coming out at the same time, not to mention the Meta and Salesforce stories talking about no longer hiring mid-level engineers because they're going to use AI to do that.
Yeah. I don't know that the BLS jobs data is all that reliable. So I have some concern about, how real the jobs are. And then I think there are a lot of seasonal Christmas time workers that it's a job and you're working at an Amazon warehouse, which is a legitimate job and counts as one job, but it's temporary.
Seasonal.
And it's seasonal. And they scale up and they scale back down, and that gets counted in these figures. And so I think the better way to look at it is like over a 12-month period or something, but that's not how the government or the financial markets or anyone else looks at it. So.
Right. All right, continuing on, because we got a lot to cover today. Inflation did tick up, and it's headed back to your target of 3. We're at 2.9.
Yeah. I mean, I think this combined with the jobs has really taken the probability of rate cuts down very low or to zero.
Yeah.
I'm not surprised. I don't think really anyone is that surprised that inflation is headed back up again. I think we're just going to be in this world where we have a 2.5% to 3.5% inflation, and unfortunately,
which is not great.
It's bad.
Compounding, that's just not good.
Well, because we had that huge supply shock, resetting of prices much higher,
right?
And then even though it has come down,
the base is high.
All it means is that the Starbucks that cost me $10 next year, it's going to cost me $11. It doesn't go down.
No.
So it's going to continue to put pressure on people that are living paycheck to paycheck, which there's a lot of people.
Yeah. Which in turn will put pressure on consumer goods and retailers.
Yes.
Right.
And healthcare. I mean, I think healthcare is
healthcare. Yeah.
Part of the drag on healthcare stocks is they don't perform well in a inflationary environment.
Yep. So, Wall Street Journal article: Why bond yields are surging around the world. It's time for us to talk about bond yields, Vic, because this has become sort of a new parallel narrative to everything going on at the Fed. Right? People are talking about the rate cuts, but bond yields are not correlating. They're not ticking and tying to what the Fed is doing, and it has to do with geopolitics, the total apple cart turnover of governments around the world, and just sort of the sense of confidence that that the markets have in this government debt.
Yeah, go down a little bit. I think they have another graph that talks about when so go right there. So this is sort of the bond yields over the last few months. And they really have gone up as the Fed was cutting and talking about cutting.
Right.
And so if you're buying a house or buying a new piece of equipment for your small business, your financing cost is more now than when the Fed started cutting. The Fed has lost the ability to influence. I mean, of course, they influence the very short end of the curve, but that's not what
we're
30-year mortgage is priced off of. Right.
Yeah.
I think that there's multiple things in the bond market. I mean, people are looking for like safety and liquidity more than they're worried about keeping up with growth.
Yeah.
And that ends up
favoring bonds. Favoring bonds.
Right.
And also, like, the S&P is pretty great.
Yeah.
Right. So, it's almost like you can have your cake and eat it too right now. If you're an investor, you get the liquidity, you get the certainty of the bonds, and 2 years running, it's pretty hard for the private illiquid markets to beat the S&P.
Yeah.
Right. So it's like, okay.
Yeah.
You don't have to be a brainiac to kind of figure out your allocation strategy when it's lining up the way it's turning out right now.
Yeah, I think I don't know that that's going to be great for job growth, but
it's not great for a lot of things,
right? But that's the reality.
But it is what we're currently experiencing, right? Okay. JPMorgan Chase disables employee comments after return to office backlash. So, beginning of the week, JPMorgan announced that they will require their 300,000 employees to return back to the office 5 days a week, right? Not a 3 and 2, 5 days a week, starting in March. Obviously, they've done the math. They knew what they were wanting there. In terms of feeling about this topic, Jamie Dimon has been pretty consistent about his view that he feels a company needs to be going into the office. This is not a new position for him.
Yeah.
However, the world has changed. Many employees have felt over time that this is a perk that employers need to provide. but no longer. And so there's all sorts of turmoil and so much turmoil that there was a lot of backlash in the post internally.
Yeah.
And they had to turn off the comments.
Yeah. Yeah. I think that, I think you summarized it. I'm not sure that leadership at JPMorgan is that concerned if the employees are frustrated. They want their culture to be, I mean, starting with Jamie Dimon and probably many levels down. They've been bankers for a long time, and they're used to a certain culture, and I think they want to return to that, and they now have enough power where they can do that.
And we need to say, like, white-collar jobs right now are not growing on trees.
Yeah.
So that is another sort of lift for them. And JPMorgan and Goldman Sachs both reported their best Q4 like ever.
Yeah.
Here recently. So I think they're feeling like they're in a strong position, right?
Yeah,
like if you don't like it, we can replace you. We absolutely can replace you. And I don't even think it's like AI. I think we can get another
another human,
really capable human
right.
to come in here and do this work. Right?
Yeah, and I think, I mean, I'm old too, but I think there are benefits to being in person. And there also are benefits if you structure your business correctly to being remote.
Yeah.
We are remote, but we have a small team. And so
right.
I think it gets exponentially harder the more employees you have. And so I can see how it would be just easier to manage and control the culture. And we're going back to this.
Yeah. Yeah. I mean, you can't compare Jumpstart to JPMorgan. It's just not even the same,
Well, what I was
universe.
trying to say is I think there are situations where a remote culture can outperform an in-person culture.
Sure.
But at the scale JPMorgan is and the number of employees they have, I think it's difficult.
Yeah. Yeah. Agree. Next article, also from Wall Street Journal, the headline is Balance of Power Shifts Back Towards Bosses. Subline is with labor markets less tight, workers face return to office mandates, smaller bonuses, and no more pet sick days. So
I love the no more pet sick days.
Yeah.
My dog is sick. It's hard for me to come in.
I mean, look, we definitely feel that as the market is getting more competitive, the forces of inflation, AI, kind of winner takes all, big capital being able to play games that little capital can't play. The changing in the administration, which is, I think, going to reduce the regulatory barriers to large, strong players kind of asserting their dominance through their size and other competitive advantages that they may have. These bosses are feeling pretty cheeky right now.
Yeah, I think that's right. I also think there's likely to be some kind of movement against that. Just because high inflation and high mortgage payments, and I can't get, the same kind of job flexibility and perks, people are getting will be frustrated about that.
I mean,
I don't know where it ends, but
yeah, I guess my question is like, what is the recourse they have, right? I mean, we've spent 2 years consolidating value into the biggest players.
Yeah.
We talk a lot about the Magnificent Seven, but you can look at the banking world and basically say the same thing is going on there, right?
Yeah. Yes, there's a small number of big market share winners there.
Yeah. And they are having incredible performance right now.
Yes. Yeah, and it's not from increasing their lending book. I mean,
no, it's
they're not lending. It's the investing. It's M&A. It's the advisory business.
Yeah.
It's trading. They are getting better net interest margin because the spread is getting better. But then I looked specifically. They're not really growing the number of loans that much. I think it's mostly like a social issue. People are going to be frustrated. We're going to talk about a strike a little later. You could do things like that, but it's not very powerful.
Yeah. I mean, and before I move into the next story, I mean, we are starting to see early signs, kind of the Steve Bannon versus Elon Musk thing that's going on, right? we are seeing early signs that some segments of the MAGA movement have identified that all these new tech guys who used to be Democrats, right, kind of prior to this Trump run, they were not. These people were not there in 16.
Yeah,
you know what I mean.
They're not like the George Bush. They're not the George Bush Senior kind of Republican crowd.
No.
They're more populist kind of than they are Republican. Probably. Yeah.
And I think they're identifying, hey, all these big tech guys that have come in, they're not us. They don't have the same, ideas about things, and they're actually not really populist, right? I mean, in the first issue where this has popped up has been around the visas and the immigration policy as it pertains to bringing in, new talent from, I think they've been talking a lot about Indian talent just because, look, in the tech industry, I mean, Indian talent's been really unbelievable. Unbelievable, right? And that is not necessarily aligned with many of the, MAGA, populist, nationalists, neocon thinkers. So I do think you're right that there's something brewing, right, that is going to come up in the weeks and months and quarters ahead as all of the big money folks who got behind Trump look to sort of ram maximizing their return opportunity through, and that will come at the expense of the lower classes.
Yeah, I mean, there's no question about that. And the Democrats have to get their act together and put forth some new people that can try to attract those people. And I'm hopeful about that in a 5-year view, but not in the 5 months. I mean,
no. Democrats are in too much disarray right now to do that.
Right. So it's just a vacuum. Right? So
it's a vacuum.
You can complain about the Republicans, but there's no one else to get behind now.
But I think your point is right. It does create an opportunity for the AOCs of the world.
Yeah.
Bernie's going to be the bellwether, right? So it's like, who can sway him? He's never going to run for president again. He's too old at this point.
Right.
But he is kind of the barometer for the populist swayable vote.
Yeah, and I think it's just going to be interesting to watch. Some of those Democrats, Bernie, for instance, I'm not sure about AOC, they're going to end up siding with some Republicans to get stuff done that helps people.
Yeah, AOC probably will not. But
right, that's what I mean. She wouldn't. I think Bernie is already talking about.
He's already done it.
Right,
he's already done it.
Right.
Yeah, he's already basically abandoned the Democrats. I mean, he was never like fully Democrat, but he's kind of abandoned them already. All right, so Mark Zuckerberg continues his sort of media tour. He went on Joe Rogan. He talked about how we need more masculine energy, and he was raised around a bunch of women. Need more masculine energy in corporate America. Said he's ending all of his fact checking stuff. Said he's ending his DEI stuff, and now he's just getting it all out of the way.
Yeah,
kind of every day another thing that he's doing leading up to the inauguration. Right, making sure I'm firmly Team Trump by the time the 20th rolls around.
Team Trump, and also he's making Meta more profitable with every move too.
Look.
So it's both ends, right? Like it's in his financial best interest and his political interest.
I don't think he has real political interest.
Yeah,
I think he only has financial interest.
I
think he only has financial interest, and I think your point is the point.
Yeah.
Right. The point is all these things he's doing is because they will continue Meta's climb.
Yeah. Right.
That's all he cares about.
And if the political winds change in 4 years, he'll change
again.
Right.
He'll change again.
Yeah.
He is not. He doesn't have any real political ideology or backbone.
Yeah.
I mean, he's just kind of doing whatever he needs to do to keep Meta growing.
Yeah, this story is more similar to the JPMorgan story, really.
This story, there has been a really interesting thing that's happened across tech. So first of all, what is the story for our listeners? The story, the headline is on Bloomberg. Meta to cut roughly 5% of staff, targeting lowest performers, right? This is sort of a continuance of the tech industry leaders acknowledging Elon kind of as their thought leader, right? I mean, Mark has done a lot of that over the course of the last week. And to me, this is it again, but I would say this even goes further than Elon. The words targeting lowest performers, that is Jack Welch terminology right there. And going back to the Jack Welch era of corporate leadership is something we really have not seen in such an explicit way in the internet era, right? I mean,
yeah.
I can't think of the last time I saw somebody just come out and say, I'm going to regularly cut some meaningful percentage of the lowest performers of my very large publicly traded company.
Yeah, I mean, I think of it as Google-led, but Meta was right there too. These sort of founder-led public companies, I mean, one, they build incredible businesses that just print a lot of money.
Sure.
And two, at least in the early years, they wanted to attract the most talented software engineers and other talent to continue their dominance. And so I think they created all of those things, like the free lunch, massages, all that service stuff just sort of included on our campus.
Yeah.
And then it got extended and more, probably, peaking right after the pandemic when people were sort of having two jobs and quiet quitting one place, but I didn't tell anyone and I got a new job. And we're seeing sort of the pendulum swing back now. I mean, all the way to Jack Welch and GE.
Yeah, it's pretty incredible. It's pretty incredible stuff. So, all right, let's move into VC deals. Innovaccer clinches $275 million Series F funding to build out AI cloud capabilities. Their post-money valuation, $3.45 billion.
Incredible size of the round and valuation. It's a one-stop sort of platform for healthcare AI tools.
Yep.
And industry. I don't know all the tools, but having one place where you can sort of easily go and get your AI tools, I think makes a lot of sense.
Yeah. Yeah. So look,
there's definitely benefits to scale.
Look, in total, they've raised $675 million. I mean, that's unbelievable amount of capital, but it's also, not as much capital as Olive raised back in the day. So, on one hand, it's like it's a lot of capital, but also I think they've made a lot more progress than some of these other really propped up deals that raised more money than them. Yeah. Right. So congratulations to them. And congratulations to Jumpstart. Our portfolio company IntusCare announced that they have now increased their total funding to $27 million and raised $11.5 million. We really did this round in the fourth quarter of last year. It was in November. We really worked it out, but for lots of reasons, wanted to hold off until this week to announce it. Jumpstart Nova was super happy to participate alongside Deerfield Management that led the deal, and City Impact Fund joined us. So we're really excited to have them on board.
It's a pretty good syndicate. Jumpstart, Deerfield, and City.
Yeah. And I had a great call with Robbie Felton, who's the CEO today. This company is super exciting.
We need to get them on as a guest, probably.
We will. We'll get them on maybe this quarter. Yeah. Maybe we'll get Robbie on this quarter. But basically, if you know anything about the PACE space, IntusCare is really becoming the platform for the entire PACE space, and now expanding into other market opportunities. But incredible team, great board. I got to join the board. So I'm now on the board.
Yeah, congratulations.
I mean, they haven't announced it. Maybe they will in the coming month or whatever. But I'm jumping the gun here. But I'm on the board with Gil Addo, who is SVP at CVS Health. He was the CEO and founder at Rubicon MD. And then David Feinberg, who's the chairman of Oracle Health, on the board. So it's
it's
strong
a
board.
Yes, it's pretty good board.
Yes, it's a great board. Julian Harris, who's operating partner at Deerfield, is very, very involved in the company. So it's a great group around the table, great management team, and great market opportunity. So talking our own book. We never talk our own book.
Yeah, we need to do that, especially. I mean, this is a good origin story. They've done a good job operating and getting it. So we need to have Robbie on and let him tell it.
Yeah, absolutely. Very excited. All right. Continuing on. Okay, this was a big deal. Eli Lilly and Andreessen Horowitz are partnering on a $500 million venture fund. So big deal here. You know, Eli Lilly is an LP with us here at Jumpstart. They're incredible to work with. You know, some of my favorite partners that we get the opportunity to work with, and really innovative in so many ways for a pharma company here in 2025.
I think they were the first one to go direct last year with Lilly Direct.
With the whole Lilly Direct thing. And here they are partnering with A16Z on a $500 million venture fund. They have their own venture business called Lilly Ventures. They're LPs in multiple funds and known to be like a really strong LP, but now partnering with, you know, I think probably the leading brand in VC today, A16Z, on a $500 million venture fund. Yeah,
I think it's great. It's going to bring, you know, much more on the ground health, pharma, biotech experience to partner with A16Z, which will be a good, powerful combination.
Yeah, and it's totally focused on, you know, the bleeding edge of the intersection of technology and R&D for drug discovery.
Yeah.
So I think that's a perfect partnership between those two firms.
And there's
you know,
tons of innovation going on.
Tons of innovation going on there. So really exciting, and congratulations to Eli Lilly and A16Z. All right, this story is from Modern Healthcare. The headline is VC firms back exchange-based employee health benefits. So I just thought it was interesting with the title. But Vic, you read through this, so tell me a little bit about what this is talking about.
Yeah, so I wasn't really up to speed on this, but there are individual coverage health reimbursement arrangement.
That's the ICRA.
ICRA. Yeah. That's what ICRA stands for. So ICRA provides the ability for an employer to not go to one or two payers and sort of offer a set plan, but instead take that allocation of funds and allow their employees to choose amongst an exchange, you know, a bunch of different choices. I think it's great. It gives more options to the employees. You still get all the tax benefits and things.
Yeah. And it drives more business into the exchange, which makes the exchange a more robust environment for VCs to bring more innovative models.
Yes, exactly. So you could get a flywheel of sort of more and more optionality, and I think that would lead to better plans and more innovation.
Yeah, we've got one of our portfolio companies that. One of their big agenda items for 2025 is really focused on exchange plans, and it's looking like a really exciting opportunity for them. So, this is really good. And you know, while there are certain markets like Medicare Advantage that have really been hit hard, and I know a lot of VCs and PE firms were looking at Medicare Advantage as a core place to innovate. New things pop up, and I think. Both the exchange, but also looking at the employer as a payer segment for opportunity more broadly is an emerging trend that I'm seeing for sure.
Yeah, I mean, I think the government is around half of the U.S. business, and employers are the other half. Yeah. So it's a huge opportunity.
Yeah. Wall Street Journal. Trump says world is free riding on U.S. health spending. He has a point. So this story, you can point to a lot of different things on this, but this is not the External Revenue Service that he mentioned in a recent Truth Social post. Right. This is a discussion around the imbalance in cost for pharmaceutical drugs between what we pay in the United States and what is paid in the rest of the world. And I think it's, you know, while we can understand the system and how it works, if you're an American citizen, you got to look at this and say, there is some imbalance here, and it would be nice to figure out a way that doesn't have too many unintended consequences to bring some balance to this.
Yeah, there's no question that, I mean, Europe does its part too, but the U.S. is the R&D center for drug discovery and new innovations in pharma for the world. And the
taxpayers.
And then we don't get the benefit of that. We pay the top prices.
Yes. I mean, that's how we fund it.
That's how we fund it. Right. And that was fine when we didn't have big deficits and our senior population wasn't that big. But those days, it has changed. And we have to figure out some way that still fosters innovation and encourages
Right.
new innovations and Lilly and A16Z finding something new
That's
and
right.
solving a big problem, while also not sort of just taking all the money from the, CMS basically, from which is paid by your taxes.
Yeah, we'll include this this link in the show notes. I mean,
There's a lot of data in there.
yeah, I mean, anytime you're talking about one of these kinds of systems that's been baked in for a long time and you start talking about changing it, of course, it's going to create issues, and we need to understand all of the issues for sure. But I think if you can see to the other side of a change on this front, I think ultimately it would be good for the reputation for pharmaceutical companies in the United States, in a way that I don't know anything else would be, right? The idea that the American public didn't feel that it was just getting killed with drug prices.
Yeah.
Right.
Yes.
So if there was a path to do that and make it a little bit more equitable, I think that would be popular, amongst the electorate. And I think it would be positive for the pharma industry. So.
Yeah.
But that recognizes that there's all sorts of
there'd be a transition, right? There'd be a lot of complications in a 5 or 10-year period.
Yes.
But then there are other developed countries, I mean, Europe and Japan, and you don't have to charge the developing world a ton to spread it more evenly.
That's right.
I think.
That's right. This article from HFMA. In a surprise move, the Biden administration terminates the Medicare Advantage value-based insurance design model. So this is a big deal.
I could not believe when I read this. I mean, I just was shocked. I'm not surprised that it got shut down. I'm surprised that Biden did it.
Yeah. So this is a huge deal, right? And I next time we see Emily, we'll have to give her flowers for
for predicting
for predicting the end of this. But my view is that there were so many growing reports and analysis that were coming out that were showing that CMMI basically was ineffective. Mm-hmm. A lot of people may not recognize that CMMI is actually part of the Affordable Care Act. It was part of that entire. It was created as part of that body
Affordable
of
Care Act.
Yeah, it was part of that whole body of legislation that went through, and so my view is that Biden knew it was. There's no question this was going to get killed by Trump, by Doge, by RFK. It was going to get killed.
Yeah.
Right. The real opportunity here was for Biden to be the one to kill it, to not allow the Trump administration to have the satisfaction of killing a key element of the Affordable Care Act. So even if they get the talking point of being able to say, hey, this thing was terrible, Biden had to kill it, blah, blah, blah. At the end of the day, Biden took care of the job,
Yeah, he put it out to pasture more nicely than quietly
at the end of the term.
Yeah.
So when things change over in next year, there is no CMMI basically, right? Biden will be able to say, I'm the one who wrapped that thing up. That's my view on probably why he did it.
That makes sense to me. There's no other. I can't imagine any other reason would do that.
No.
It probably needed to be shut down, and it's also kind of sad. I mean, there was a lot of promise in the concept that we will do all kinds of new programs. We'll try things. We'll try to encourage patients to behave more healthier, change what they're doing, go to the doctor more often, and that will result in healthier people and less expensive care over time.
But it didn't.
But it didn't work.
Yeah, but it didn't work. Didn't work. And I think our industry, the healthcare innovation industry, because I feel like what we do in VC is just a component of the broader healthcare innovation industry. We got to deal with that. We run around talking about value-based care like it's, the holy grail.
Yeah.
And the bottom line is it got its time to run, and it didn't work.
Yes. It didn't make people healthier or save money.
No. All right, couple back-to-back stories here from Politico. The Supreme Court agrees to hear the challenge to Obamacare's preventative care coverage, and it sounds like they're going to focus on getting this done later on this year.
Yeah, so this is one of the components of Obamacare that various people have been complaining about from the beginning, which is access to sort of preventative or health and wellness. So birth control is the thing that is the hot button issue, but any health and wellness kind of things need to be covered.
Right.
And some companies are frustrated with that. I think it's being sort of like all these Supreme Court things. It's sort of being leveraged to cause challenges to the law for a whole bunch of other reasons.
Sure.
But that's the discussion, and I think it has they haven't even started yet, but they're going to pick it up in this year. The arguments will be the spring, and then we'll hear in the fall. And I think it's there's a decent chance that there'll be some change. I mean, Supreme Court's pretty conservative.
Decent chance on that one. Next story from Politico: the House GOP puts Medicaid, ACA, and climate measures on the chopping block. So these are sort of three back-to-back ACA-related stories.
Yeah, right.
ACA is going to be under siege.
Yeah, that's right. And this also, Emily predicted was going to happen. The place where you have Medicare is a hard thing to attack in detail because seniors vote in huge numbers. But Medicaid has all kinds of complexity, and I think the state waiver programs, which we're doing a program tomorrow with the portfolio companies to talk about, it's not like it'll be shut down, but there's not going to be a lot of new waivers created, and the Republicans are going to shift more to like block grants.
Right.
Here's the money and do what you want.
The FDA banned artificial dye red 3 from food. So got out in front of this before RFK got the satisfaction of doing it.
Yeah, this is, I think, probably very similar to the other story.
Yeah.
I mean, why the heck didn't they do it previously?
Politics, man. Politics.
Yeah. I mean, we don't need red dye number 3.
No, of course. Everyone knows that.
Yeah.
Right. But sort of just.
Yeah. So for people that are listening, there's a picture of some fake bacon. I guess it's fake bacon. Yeah. Veggie bacon strips.
Bacon strips, yeah.
Are no longer, they're not going to be as red in the future.
Yeah. Or strawberry yoo-hoo.
Yeah.
They'll have to find another way to make that strawberry yoo-hoo look pink like that. Okay, and I think this is the final story in the policy section.
Yes.
This is this is a big one. So there is a new app in the U.S. App Store that is number 1. It, like TikTok, is from China. The English name for it is RedNote. I cannot pronounce the Chinese name for it. It is their answer to Instagram. We have Instagram here.
Right, and it's in English.
America. It's in English. But this new app, RedNote, that is not in English, there's a Chinese app hosted in China. The language is Mandarin throughout the app. Hit number 1 in the App Store.
Yes. So just a little background. ByteDance, that owns TikTok, has announced that they're going to shut down the app as of Sunday. Now, whether they actually do that or not, we're talking on Thursday.
The day before the inauguration.
Well, and the day that it is supposed to be shut down by the court case. But the law does not require them to shut it down completely. The law would prevent Google and Apple from doing updates through their app store. So you could have a much longer period of transition, and they're electing to have a clean, shutdown time, I think, for the biggest effect. And they're allowing their customers to take all their data, so whoever they're following and their information, and I think Americans, some subset of Americans, but enough that made this app be number 1, are so mad at their government
and
Meta and Musk. They don't want to go to the existing alternatives, and I think it's
a form of protest.
Yeah, it's a form of protest. They're picking another Chinese app. And what's really interesting is that I was listening to this guy describing. I tried to look at it, and then I could not get through all the acknowledgments of the legal stuff
because it's in Mandarin.
No, it was in English, but you're giving them all of your data,
right?
Which I do for Google and other apps, but I was not. I'm not sure that it was right, and so they have Chinese people welcoming the Americans and showing them how great life is in China, and you can get lobster for lunch for $1, and you should come visit, and life is great in China. It's propaganda, of course, but it is, I think, reasonably working. So all of these young people are very mad that TikTok's disappearing, and they're on RedNote doing who knows what.
2025, man.
It's crazy. We're only in 15 days in.
Oh, it's so crazy. All right, moving to the payer sector. Q4 earnings for UnitedHealth were announced. CEO defending the company as the stock sinks on earnings. Medical costs are up, and the MLR.
Yeah, they beat on earnings, but they missed revenue, and MLR
was up. Yeah. So,
and United is. We were talking about this before the show that they have a lot of levers to pull, and they're really good at not missing. So for them to miss, it is surprising.
Yeah,
and it means that the industry overall is facing real headwinds.
Absolutely. Yeah. So look. The whole sector is going to be down, kind of from that. But look, I think let's just call 24 what it was for UHG, a tough year. From the Change Healthcare start of the year to the Brian Thompson tragedy and the end of the year, just a really hard year. And my sense is, if I had to bet, and we don't give investment advice on this show, but I think they're going to rally this year. I think they're a resilient organization. They're highly talented. They have all of the best assets you could possibly have, and unless they somehow become a target of the new administration, which I haven't seen any real signs that they would. Yeah. I mean, maybe aspects of what they have, because they have everything. So, maybe PBMs get targeted a little bit or things like that. Yeah. But that's not going to be isolated to them. Those are just sort of structures inside of the overall healthcare industry because they have everything except for a hospital. Yeah. They're going to have it. But my sense is they will be pretty resilient.
Yeah, I think that's right. Part of the question is, does one want to invest new money into healthcare in January 25?
Right.
I don't know. It seems like payers are having a lot of headwinds, but providers are as well. And so I do think that...
So is pharma.
And so is pharma. So it's we talked about this the last couple shows, that the overall market is struggling. I think United is an indication of the whole market. They're so big and well run that
agree
they will be fine eventually, but the whole market's down. I feel the same about HCA. They're both great operators, and I'm not sure that we're at the low point where I'd want to put my own money in. I own both those stocks today, but I haven't bought a lot of new shares. I think we have a quarter or two of headwinds before it really turns.
Yeah. No. Listen, I very much agree with that, and I think from our perspective, we've been watching this industry just kind of grow and grow and grow. I think when we started back in 2014, I think the number was $2 trillion.
Yeah.
It's been 10 years. The number is $4 trillion.
Right.
And at some point, there have to be some cracks somewhere if we're going to turn this ship around.
Yeah.
And so as much as we would love to see the sector kind of keep up with all the AI giants and things of that nature, I think the change that the American people need from this healthcare industry is probably going to be reflected in some chinks in the armor in terms of stock performance.
Yeah. And then that leaves an opportunity for a venture-backed company to
Private
get some
equity
market
too.
share, private equity.
Yeah.
Exactly.
Fierce Healthcare, docs incensed by Medicare Advantage hike, demand physician payment update. This is probably going to be an opportunity that Dr. Oz will pick up on.
Yeah.
I think we talked when he was announced as the pick for CMS that one of the key opportunities for him was to turn around the sentiment of physicians and the AMA in particular, relative to CMS, and kind of get the docs paid again. And I think this sentiment as like the final the final grudge between the AMA and the docs with the Biden administration gives a great starting point for Dr. Oz to sort of turn this stuff around.
Yeah, I agree. It's sort of adding insult to injury. Like they already were frustrated with the very low increase in the physician fee schedule. And now it is insulting that Medicare Advantage is getting a 4% bump when docs didn't get that. I don't think the physicians would really care about the MA changes if they felt good about their changes.
That's right.
So that's your point about Dr. Oz. Like he can fix this by just fixing it, and then MA should do whatever MA does.
And it's an easy target. You overlay MA getting a hike with shutting down the whole value-based model in MA because the thing didn't work, overlaid with the last year of MA nonsense that's been going on. And you're kind of like, hey, how about you just pay us as doctors? How about you simplify this?
Yeah.
Just like pay the docs, right? So, I think this is good starting fuel for a Dr. Oz, physician-friendly agenda.
Right.
Another strike. 5,000 Providence nurses, doctors launch Oregon's largest healthcare strike.
Yeah, so they went on strike beginning of the week, or I guess Friday, and they haven't come back to the table yet. Both sides are saying the other side, of course, the other side is being irrational.
Sure.
In general, I have noticed that the nurses, and there are some doctors in this, have been able to organize and get better terms. That happened with maybe Kaiser. It was California before.
We saw that quite a bit last year.
Yeah.
I think there were at least 3 situations where the nurses won in their strikes.
Yeah. So the nurses rejected a 20% raise over 3 years. And I think they'll probably get more.
Yeah. I mean, if we had to go based on last year's track record,
right.
It sounds like striking is a viable model for nurses to get the wage, or at least get closer to their goals in terms of their negotiated wages.
Yeah.
Right. And I think maybe just one other thing I'll say is that because we've seen multiple nurse strikes happen, it also seems like health systems are able to absorb the shock for enough time for it to not have significant impact on their ability to deliver care to the community. And then they kind of have a time
it's almost like
which they can work through
withstand for 2 weeks.
It's something like 2 weeks, right? Yeah, it's something like 2 weeks.
They let it go to a strike, and then they have to figure out something.
Right, exactly. All right, a little bit of JPM news here. So Modern Healthcare did a nice synthesis, really look at the nonprofit health systems and noticing that this $30 billion revenue target is kind of a consistent target that a lot of these nonprofits talk about. And in this article here, they sort of focus on, your big names, your Common Spirit, your Advocate, which is a new big name,
right.
Putting together Atrium and Advocate Aurora, obviously Ascension, right? The big ones that are already Kaiser.
Yeah, they're already
at 30
right.
or moving, through it. But they also noticed that Advent Health and then Novant Health have also each set these $30 billion annual revenue targets. And, when I saw that, I was immediately, my eyes went to Novant because I know a little bit about what's going on in the Carolinas. Right. And Novant is just small relative to Advocate, especially you look at the moves that Atrium/Advocate have made over the last 3 years. Novant is just pretty small. I mean, 10 billion is what they say in this article. So to 3x, you're talking about some serious M&A. You can't grow through any type of construction.
You're not going to organically grow
not through construction.
No.
You got to M&A your way to 30 billion.
Yeah, I think I wouldn't have had the number 30 billion, but we have talked about for probably since we've started this show that you have to have scale as a health system, or you have to have the sort of payvider integrated model, which also gives you a lot of revenue because the insurance side has a lot of revenue attached to it.
Right.
Or both. And I think groups like Novant, there's no middle path. They can't stay at 10 billion. They don't have the negotiating power. They can't go to the bond markets. They can't attract the staff. They can't win deals. They can't negotiate with payers. It just doesn't work.
No, it doesn't work.
You either have to be like a 3 hospital system that has community support. I'm not even sure that works, but there's a lot of those.
Yeah.
Or you have to get to scale.
Yeah. I mean, I think the only alternative to that is if you are truly a community health system where you're in these smaller markets where you're really the only player, so you have much more pricing leverage. Mm-hmm. But Novant is in competitive markets.
Yeah.
That's what I see as like the real problem. It's like you're in competitive markets, so when you're negotiating with insurance providers, you're not well positioned at all. You have to sort of do things that are likely going to be loss leaders, or you pick up somewhere else. Advocate. I'm thinking specifically in the case of Novant, like Advocate's going to have all this leverage over you, and
I mean, they overlap probably in all their markets.
Yeah.
I mean, we know because it's sort of a Nashville playbook. The for-profit systems are much more explicit about what market they want to enter, what their strategy is within that market.
That's right.
And I mean, I would say even LifePoint and Ardent are in kind of smaller markets, but they have very differentiated strategies. They're not in the same markets, and they have a very different approach that works for the set of assets they've acquired. Nonprofits traditionally haven't been that disciplined or like focused or detailed. So you have to get to scale if you're going to be kind of just everything.
That's right. Avel eCare acquires Amwell Psychiatric Care, expands to 46 states. That's a pretty big sell-off / acquisition here.
Yeah. I was surprised about Amwell getting rid of their behavioral health side, because in telehealth, so Amwell's pretty much all telehealth, I think. Yeah. And selling the psychiatric care unit has to be a significant percentage of their business.
You would think.
So I don't know where, my takeaway was that I don't know where Amwell is going.
Yeah, right.
Probably nowhere. I think it seems like they're selling off pieces.
That's kind of what it feels like,
this is maybe one of the more valuable pieces.
Yeah, it's kind of what it feels like. I mean, in the article, they talk about how Amwell struggled in the stock market, and that they had lost 66% since the start of the year, versus the S&P's gain of 5.6.
Yeah.
So,
I mean, they're sort of a fast follower to Teladoc, and not as good as Teladoc.
That's a bad
and Teladoc has not been great. Yeah. So it's hard.
Saying you're a fast follower and not as good as Teladoc is hard. That's a bad position to be in. So I think kind of the wind down of Amwell is maybe what we're looking at here, right?
Yeah.
And then another not so great story. Prospect Medical Holdings files for Chapter 11 amid criticisms of prior PE ownership. So this makes a little bit more clear the PE story we were looking at and decided not to cover, I think 2 weeks ago maybe, or did we cover it? Did we cover it?
I can't remember if we covered it now.
Yeah, I think we didn't. I think I was just like, I don't really want to talk about.
Yeah, so the Senate was questioning. So this private equity firm bought Prospect, which has maybe 20 to 25 facilities around the country, California, but not only in California. Leonard Green. They bought it in 2010, and they did the private equity playbook, right? They put debt on it. They paid a dividend out. Then they did a sale leaseback of the real estate, paid a dividend out. This is not unusual stuff.
No.
But it does leverage up the balance sheet and put a lot more debt service on the business.
Yes.
And then they sold, and they're out.
I mean, it hollows out the actual health system is what it does.
Yes.
It no longer has the asset base. So it's got a really poor margin operating business that doesn't have any underlying assets on the balance sheet that it can leverage, probably not bondable, subscale. I mean, it's kind of a nothing. No, really. I mean,
yes,
right? I mean,
right.
We just got done saying these nonprofits have to be like, in the right markets, 30 billion plus, blah, blah, blah.
Yes. It is legal to do and not
good.
Not good.
Not good for the communities that depend on those systems, not really understanding the macro of what's going on for health systems today, right?
Yeah. Yeah, that's right. And there's a need for change to the laws. And so now it's going into Chapter 11 bankruptcy protection, and they will do whatever they do to change the leases, and the debt holders are going to take a haircut, and maybe taxpayers will have to bail them out. And meanwhile, the private equity firm didn't do anything illegal, but everyone, including me, thinks it wasn't right.
I think the worst part of it is just it makes the asset very hard to rescue.
Yes.
You know, you've hollowed out its ability to even be an attractive acquisition target.
Yeah.
Right?
Yeah. I mean, the dirt in the buildings had some value, and you sold those.
Yeah, that's the point. Like if you don't have that on the balance sheet, and you're subscale, and you're probably not operating your ass off, and you probably don't have great technology, and you probably don't have great payer mix, who the hell wants to buy it? You don't even have the building.
Yeah. Yes. That's right.
Right?
That's right. So it does not make sense to have nonprofit health systems go through this process. I mean, it happened with Steward, happened with Prospect. I think it's probably happened hundreds of other times. These are just the highest profile ones.
Right. All right, moving into the pharma sector. 2 deals to talk about. Johnson & Johnson to acquire Intra-Cellular in $15 billion deal. That's a pretty big deal.
Yeah.
It's a good-sized deal.
Yeah, they're a decent-sized company in mental health. And I think J&J was strong in sort of adding that. They'll continue to sort of build their portfolio of mental health tools.
Yeah, there's a drug called Calypta that treats bipolar depression and schizophrenia. Mm-hmm. They're projecting that the drug sales could reach $4 billion by the year 2030 if regulators approve expanding its use to major depressive disorder. Right. So
that's the bet that they're taking. That it will get expanded.
Yeah. And it seems like there's enough tailwinds around supporting, mental health and the need to bring all sorts of different modalities, especially for treatment-resistant depression.
Yeah.
So, seems like a good bet. And then Eli Lilly is buying Scorpion Therapeutics drug program in a $2.5 billion deal.
Yeah, this is a breast cancer treatment. I didn't really know much about it, but decent.
I mean, Lilly marching on.
Yeah,
Lilly marching
Lilly's
on.
doing. Lilly's good.
All right, and then in terms of health and us, kids turn to a mental health chatbot to share their anxieties. We continue to see chatbots and AI becoming integrated in our daily lives in a really kind of meaningful way. I mean, it's no two ways around it.
Yeah, it's really interesting just to track like the public opinion and news articles where this story a year ago would have raised all these alarm bells and been an issue, and now it's just like a fun story, and this girl is chatting with Charlie, and
it's in Nashville.
Yeah.
Yeah, this girl's from Nashville.
Yeah, the writer's from Nashville.
Yeah.
And parents are feeling much more comfortable giving their kids a chatbot because it's everywhere. I don't necessarily think that means it's good medicine or safe, but it's just like the society is just like we're just accepting it.
It's and this reminds me, it's time to schedule TK to come back on the show.
Yeah.
But it's like he told us the first time. It's like it's inevitable.
Yeah.
This is inevitable. The need to scale access to care will drive the adoption of it.
Yeah.
Period. Right?
Yeah. And so I think we have to, I've certainly come around to this, like everything is accelerating, and the only thing to do is to try to put some guardrails so that we go generally in the right direction. And there's going to be hallucinations and things that happen.
Well, we're going to do it.
But we're going to do it.
We're going to do it.
It will be mostly good with some bad, and that'll be it. But this is a good segue. MultiCare is investing in Layer Health. Layer is talking about clinical decision making, like in very complex cases. How do we make decisions?
And look, we're now going on well over a year of proof that these LLMs beat the docs.
Yeah.
You know what I mean? Like, so you do get to a point where you're not saying the doc goes away, but you are saying, is it even ethical to send docs into the theater to practice medicine without these tools?
Yeah.
Like, is it even appropriate to do that? Like, is that the best standard of care anymore?
Right. And I think it's probably better to have AI empowering docs. But I just think it's interesting to note that the positioning has completely changed in the last year, where it used to be these tools are predictive, but they're not definitive. It's randomized. So there's going to be times when it doesn't come up with the right answer.
It's stochastic, not deterministic.
Yes, that's the accurate way to say it.
Yes.
And a year ago, I would have said it can be used in non-clinical settings, but we should keep it out of between the doc and the patient.
Yep.
And now I agree with you. It's being positioned and everyone is accepting. We are adopting this.
Back to Ambar.
Yes.
Right? Ambar Bhattacharya came on. We need to have him back on.
Yes. Yeah.
He said the term that everyone's okay with is copilot.
Yeah.
The term everyone's not so okay with now is autopilot.
Yes.
But planes fly on autopilot all the time. All the time. And the idea that we're not going to have autopilots happening in the clinical world is just, it's not real.
Yeah, that's an interesting example because I think there's many flights that take off, fly, and land on autopilot.
Yes.
But the pilot sits in there and we pay them.
Of course.
And that is valuable as a safety component. But then when the Boeing planes had problems, which wasn't in the U.S., when they had problems, the AI was not, the pilots died too because they couldn't really take control back over. That's interesting.
Did you recently see the Waymo that was just like in a loop? I didn't. There was some situation where it
was confused.
It was confused, and it just was like doing a circle.
Yeah,
it was like just kind of going in a roundabout, right? You know, and it wouldn't stop. Couldn't get it to stop, right? And this is the thing with the autopilot, right? It's like there's no question. There's 100% certainty that case will happen, right? It will get it wrong at some point.
Yeah. And what we are coming around to as a society, but it's not smooth, right?
No, of course not.
People are realizing a different pace is that let's just take cancer care. If you're using an AI with a doc, it will uncover more optionality, and you'll probably get to a better end result 99, maybe 49% of the time.
Sure.
And then 1 out of 1,000 times, it'll make a mistake, and the doc maybe won't have caught it. And I think we are starting to accept that. Like, okay, well, it'll be better for a lot of people. And then once in a while, when it hallucinates, we'll have to mitigate that. But we're going to do it as certainly in self-driving with looking at how many humans fall asleep or are texting or whatever. And yes, the AI will have challenges, but it's not going to have those challenges. And we're just trading one risk for another.
Yep.
So anyway, layer is pretty interesting.
All right. Wrapping up our AI rundown, General Catalyst teams up with AWS to co-develop and deploy AI-driven solutions. The first sentence in this article with Fierce Healthcare, venture capital firm General Catalyst has teamed up with Amazon Web Services. My question is General Catalyst a venture capital firm anymore?
No. They choose to call themselves that, but what they do...
Once you buy a hospital...
Yes. And
doesn't that turn you into something different?
And so they own a hospital and they manage, I don't know, $5 billion? Manage a lot of money.
And here's the thing. I like them.
Yeah. I like they're very smart.
I like what they represent. I like the innovative, if we didn't have them, we wouldn't have any fun stories to talk about, right?
Right.
I mean, they're doing all sorts of like really fun, out of the box thinking kind of things. It's cool. I'm just not sure they're a VC firm anymore.
Yes. They began life as a VC firm.
Yeah, right.
And I think they prefer that term. But
it's a benign term relative to like the stuff they're trying to do.
Right. That's why they like it, I think. And they're partnering with Amazon to deliver AI at scale.
Right.
And sort of course they are, right? But they only had 3 to pick from.
Yeah, sure.
And so
all right. And this is a story from the Information, which for any of our listeners who don't know, the Information is a really great inside scoop source for stories around Silicon Valley.
Yeah.
So the headline here is NVIDIA's top customers face delays from glitchy AI chip racks.
Yeah, the Blackwell chip, which is their
it's flagship, right?
Flagship
chip, isn't it?
Yeah, it's a flagship. It's the really expensive. It's called a chip, but it's pretty big in size.
It's heavy. It's massive.
Heavy. It has been returned by Microsoft, Google, and Meta because they were having power issues and it was overheating and not working. The benefits of Blackwell, I think, are that supposedly it's a lot faster, but doesn't use as much power. So all of these data centers are really constrained by power first and then compute or the chips next.
Yeah, but power is the fundamental.
And so I think this article seemed to indicate that NVIDIA can fix these problems and get their shipments back going. They weren't like such big problems that it was a death blow, but definitely a setback.
Yeah. I mean, a little bit of bad press for them makes them seem at least like...
Yeah, they're human. Maybe they're humans
running
the
company.
Human. Yeah.
Like, holy cow.
Yes.
800% growth over the last 2 years?
Yeah, that's right.
Insanity. Total insanity. All right, final story. U.S. targets China with new AI curbs overriding NVIDIA's objections. So this feels like another one of those, like, Biden not letting Trump get all the satisfaction of, playing hardball in terms of foreign policy when it comes to trade, certainly with China and in our biggest area of competition, AI.
Yeah. And like a lot of things, if the Biden administration had been this on top of it and politically savvy the whole time, it might have been different. The last 2 weeks, they've done a lot of smart things. But
begs the question if these smart things were even their ideas.
Yeah. So we have already blocked the sale of these advanced chips to China, but we were selling them to peers of China, like Brazil, and then it just gets resent to China.
Yeah.
And so now, now they have a much more detailed, holistic sort of list of countries. The G7, I think they may have added one other company in, but there's basically like 7 or 8 countries that can buy what they want.
NVIDIA's market.
Yes. Yeah. So our strong partners, the G7 countries, basically can buy as many as they want. And then the next 130 countries have limits where whoever in the Biden administration decides for their population, you can have this many because you need that many and you can't have any more.
Right.
So that's how they're planning to control it. And then our enemies, which I'm not going to get right, but China, North Korea, Iran, Russia, maybe there's someone else in there. They are barred altogether.
Yeah.
I think it makes sense. I mean, yeah, NVIDIA is upset with it, but
oh my God, please, 800% over the last 2 years.
Right.
Yeah. I think what will be interesting is how this actually takes effect. You know, Jensen Huang has started to be more vocal about his sort of disappointment in the Biden administration and excitement about the Trump administration. That's new for him, sort of voicing that. And so it'll be interesting to see how sticky this is and whether or not, you know, Trump just says, no, you can sell it everywhere, just tariffs, you know, just extra cost, extra fees into the United States. But no, sell everything to everybody, but just make sure that the United States gets revenue out of it. Right. Which seems to me more kind of his thought process on this as opposed to like playing limiting games.
Yeah. Yeah. And what's going to be interesting is, you know, Grok, which is Elon's thing, they have the biggest compute and power in Memphis.
Yeah.
Their models, the Grok version 1 was not that great, but I think version 2
getting better.
Yeah, and version 2 is going to be competitive with everyone.
Well, isn't 2 already out and they're working on 3?
Maybe 3 is the one.
3 is the one that they're saying is going to actually be charge worthy. Like you can actually charge for it.
Yeah. I think 3 is going to be like a frontier model, competitive with everything.
Proper competitive frontier model, yes.
And that's already in place.
Yeah.
And now they're in the training process in Memphis. And so there's going to be U.S. people that want to, U.S. companies that want to buy as many NVIDIA chips as they can produce. So I don't feel too bad when we have supply shortages for U.S. customers.
That's right. Agree.
But we'll see how it evolves.
Yeah. I mean, as much as I have issues with Meta, I would prefer Meta to have access to the chips over, you know, some Chinese company. There's no question about it.
Yeah. Although we want RedNote to be very performative.
Oh my gosh.
all the young people trying to protest.
But isn't that? I mean, I do want to wrap up talking about that, which is to say, we've spent all of this energy in the Senate and now in the court system around banning TikTok. And doesn't this yet again demonstrate the ways in which government trying to regulate and legislate economic activity is like whack-a-mole, right? I mean, it always has these unintended consequences and economic actors will find a way, you know, and in this case, I would say the economic actors are all the people on TikTok in the United States.
Yeah.
Like it's actually not RedNote. That's not who's doing this.
No, they're just the recipient.
That's right. It's the U.S. TikTok users.
It's the influencers that have built a little business, but it's their business that's really important to them.
Exactly.
And they feel like the Senate and the government and the Supreme Court is taking it away from them. And the reason they're taking it away is that China could do something at some point, maybe
already is doing things that we can't be certain of.
Yeah. I'm cynical enough to think that China is doing the best they can do to influence American voters on Instagram.
That's my
and on X and on TikTok and everywhere.
Yeah, except for the reason why TikTok has been so successful is because they have a different algorithm and a different engagement model.
Yeah.
It's not about comments.
No, they don't want. There's no. I mean, maybe there are comments, but they don't affect the feed.
It's not. The TikTok algorithm and the TikTok serving model of content is different from any other app. The other apps are trying to get like TikTok, but they're not. They're still not. And I think that is, I think your point about influence is likely right. That yes, they are on all of the U.S. owned platforms as well, but their abilities in terms of what they can do when they fully control the platform is much different than being a content producer on another platform.
Yeah,
being the platform itself is hugely powerful.
What can they do when the users write in Chinese and then the Chinese government is translating for Americans?
We'll have to watch and see the RedNote saga, won't we?
Yeah, so it will be. It's going to be a crazy week on Sunday and then Monday with the inauguration and everything.
Yeah, for sure.
I will not be in D.C.
So let me just see here. Am I on the show next week, Vic?
I don't know.
I am not on the show next week.
Okay, well, I will have a guest.
You got to have a guest, man. Yeah. Yep, you got to have a guest because I'm not on the show.
Okay. I can figure that out.
All right. Good luck with it, and I look forward to listening.
Yeah, we'll talk about all the crazy DC stuff while you're away.
And we have a whole bunch of our regular guests we need to be scheduling. Emily, we need to get Emily in here. We need to get TK in here. We need to get Ambar back on the show.
Yes, definitely.
All right. Until next time, thanks for putting the show together.